What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome to another episode of the CPA Zone. Today we're going to talk about material participation. So we're going to dive into this a little bit more. We touched on it last week when we discussed real estate professional status. One of the things you need to demonstrate after you qualify as a real estate professional is your material participation in your rentals. Now, material participation applies not only to rentals for real estate investors, but to anyone invested in a business. If you own an interest in a business, then you need to demonstrate material participation if you expect to deduct those losses. Otherwise, the business is considered a passive activity. So all of your activities are either passive or non-passive for tax purposes. Passive activities come with special rules that limit your ability to deduct losses. Your passive losses can be used to offset passive income. Any excess is suspended and carried forward into the future. Now, if you materially participate in a business with losses, then you can deduct those losses. So participation itself generally means any work done in an activity by an individual who owns an interest in the activity. To materially participate, you must be involved in the operations on a regular, continuous, and substantial basis. So you're not required to keep contemporaneous time logs to prove this. However, it's highly recommended. Ballpark estimates after the fact do not count in court. So we recommend tracking your time in any case where you need to demonstrate material participation, or if you would be required to show it in the event of an audit. So there are 7 tests in the regulations. These are found under the passive activity loss rules under section 469. So your material participation tests are found in regulation 1.469-5T. If you pass any one of these 7 tests, then you'll be qualified as materially participating. When it comes to qualifying under the material participation rules, you can combine time with your spouse. So remember last week when we talked about real estate professional status, one spouse had to pass both tests to qualify as a real estate professional. However, when we're dealing with material participation, spouses can combine their time. So that's going to help if you're married. So the first test of the 7 is you participate in the activity for more than 500 hours during the year. So if you're active for more than 500 hours, then you are going to qualify as materially participating. Pretty bright line test. You just need to make sure your hours are actually impacting the operations. They're not things like studying reports, or we'll go into some of the activities that don't count. Just know that in general, your time needs to impact the operations of the business. Test 2, your participation in the activity is substantially all of the participation, including anyone else that worked on it, whether they're an owner or an employee or a contractor. So you're basically doing everything. If that's the case, there's no minimum hour threshold. You'll qualify because you're doing all of the work. The third test, you participate in the activity for more than 100 hours, and your participation is not less than anyone else. So we'll look at an example here. This comes right out of the regulations. So this says, B, an individual is employed full-time as a carpenter. B also owns an interest in a partnership that's engaged in van conversion activity, which is a trade or business. B and C, the other partner, are the only participants in the activity for the year. The activity is conducted entirely on Saturdays, and each Saturday throughout the year, B and C work 8 hours in the activity. Although B does not participate in the activity more than 500 hours, under this test 3, B is treated as materially participating because B participates in the activity for more than 100 hours during the year, and B's participation is not less than anyone else. So what they're saying here is B and C work exactly the same amount of hours during the year. They both hit 100. They'll qualify. If you plan to say that you and your partner both work the exact same number of hours, you better be able to prove it or substantiate it. It is allowed, but it may not always seem reasonable unless you're both working the same days and the same hours every day all year long. Just keep that in mind. So that's an example of how test 3 works. The fourth test is if the activity is considered a significant participation activity and your aggregate aggregate participation in all significant participation activities during the year is greater than 500 hours. So, that test one, more than 500 hours, materially participating. This test basically says maybe you have multiple businesses and you spend a smaller amount of time in each one. If you combine them together and exceed 500 hours, if they each qualify as a significant participation activity, then you're going to pass. And a significant participation activity is any trade or business, not an investment. So this can rule out several rentals. So any trade or business, and you would not materially participate in that trade or business except for this test, because we have this significant participation test. In significant participation, you're still required to participate for more than 100 hours. So the minimum is 100 hours in each significant participation activity, and then combined, all activities exceed 500 hours. So an example is, let's say C, an individual, is employed full-time as an accountant. C also owns interests in a restaurant and a shoe store. The restaurant and shoe store are separate business activities. Each has several full-time employees. During the year, C works in the restaurant for 400 hours and then the shoe store for 150 hours. Both the restaurant and shoe store are considered significant participation activities under the rules here. So since C's aggregate participation exceeds 500 hours, and each activity, the restaurant and shoe store, he spends more than 100 hours in, he's going to be considered materially participating in both. So now test 5, you materially participate in an activity for any 5 of the 10 prior tax years, whether or not consecutive. So generally, as long as it's the same activity and things haven't substantially changed in that activity, if you've passed one of the other tests in any 5 of the 10 prior tax years, then you're still considered as materially participating now. So it's essentially a continuation of your past activity. Test 6, similar to test 5, if the activity is a personal service activity and you materially participated in any 3 prior years, whether or not consecutive, and it's not 3 out of 10, this is any 3 period, then you're considered materially participating. Now, personal service activity is something in the fields of health, law, engineering, architecture, accounting, actuarial science, performing arts, consulting, or any trade or business in which capital is not a material income producing factor. It's more of the knowledge of the person. Then you can pass this test 6. The 7th test, and the most difficult to pass, is based on all the facts and circumstances. You are considered materially participating on a regular, continuous, and substantial basis. So this test is subject to additional limitations. So for purposes of this test 7, certain management activities are not going to count unless no one else is paid to manage the activity and no one else spends more time managing the activity than you. So basically, you're the only one managing the activity, or you spend more time than anyone else managing the activity, and those people aren't being paid to manage it. If that's the case, then your management time could count. Otherwise, you need to be directly impacting operations. Also for test 7, if you don't participate at least 100 hours, you're not going to pass this test. So you still need that 100-hour minimum. But maybe there's people that work more than 100 hours also, so you're not going to qualify under test 2. This is the most difficult test to pass. So as we talk about participation, so defined it in the beginning of the episode as, any work done on an activity by an individual who owns an interest in the activity. There are other limitations here. So certain work that's not normally done by an owner can be excluded as participation. So if the work's not normally done by an owner, and one of the main purposes for doing the work is to avoid the passive activity loss rules, then that time's not going to count. And here's an example that comes right out of the regulations. So E is a married individual filing for the current tax year and is a full-time attorney. E also owns an interest in a professional football team that is another trade or business activity separate from his law practice. E does no work in connection with this activity, spends all his time on the law practice, but he's expecting losses and doesn't want to have those losses suspended. He wants to be able to deduct them. So what E does is he goes out and hires his wife to work as a receptionist in connection with the activity for the football team. And she works an average of 15 hours a week during the year. So his main intent here is to avoid the passive activity loss rules. Under this section, each spouse's time is not going to count because receptionist work's not a type of work normally done by the owner of a football team. And E's main purpose for hiring her and putting her in this role is to avoid the disallowance of these losses. So in this case, that time is not going to count. So that's just a limitation to be aware of as you're trying to qualify time in your passive activities or get those passive activities to not be passive by qualifying under the material participation rules. Another limitation is participation as an investor. So work done by you as an investor is not going to count unless you're involved directly in the day-to-day management or the operations of the activity. So investor hours are things like studying and reviewing financial statements or reports, preparing, putting together financial summaries and analyses of operations, and monitoring the finances and operations of the activity. All this time is considered investor time and is not going to count unless you're involved in the day-to-day management or the operations of the activity. So that's key. Now, when it comes to being a limited partner, let's say you invest in a syndication. So generally, if you're a limited partner, you can only pass material participation tests under 1, 5, and 6. So that's test 1's the 500 hours or more of participation. Test 5, you materially participated in any 5 of the past 10 tax years. Or test 6, it's a personal service activity, like an accounting firm, and you materially participated for any 3 prior tax years. So a limited partnership interest generally means a limited partner is when the liability of the partner for obligations of the partnership's limited under the state statute in which that partnership's organized. So it's limited to some amount like their capital that was contributed. So they're not on the hook for anything else. They have no further recourse. So generally in that case, they are only going to be able to show material participation in tests 1, 5, or 6. Now, an exception to that is if a limited partner also holds a general partner interest, then they're not going to be treated as a limited partner for purposes of the material participation tests. So if they have a general interest and a limited interest at the same time, now they aren't subject to this limitation. So there are occasions when a taxpayer has multiple business activities or multiple real estate investments, and it's going to be extremely difficult to show material participation in each one. So the default position is you need to show material participation in each activity. So there are 2 grouping elections out there that help taxpayers overcome this burden. So the first is what we call the -4 election because it's found in the regulations 1.469-4. This is the election used by someone that owns multiple businesses or multiple rentals that would like to group them and does not qualify as a real estate professional, which we'll talk about next. The -4 election allows you to group related business activities or related rental activities together as one common activity for material participation purposes. To determine if the separate activities can be grouped, we use a facts and circumstances approach, and we look at the following items. So similarities and differences in the types of businesses, the extent of common control, the extent of common ownership, geographic location, and then the interdependencies between the various business activities. Now, generally, you cannot group a business activity with a rental activity. However, if your business rents a building that you own, this is considered a self-rental and the grouping is allowed. So you can use this -4 grouping. Let's say you're a doctor, you're running a medical practice that operates out of a building that you also own 100%. This is a self-rental and you can group the activities together. Now, the next grouping election is strictly for real estate professionals. We call this the -9 election or the 9G election, again, because of the regulation. It's under 1.469-9G. This election allows real estate professionals to group their rentals. So again, default position, each rental property is a separate activity. You would need to show material participation in each. However, we can group them under this regulation and treat all the rentals as a single activity. And this is solely for real estate professionals. You qualify as a real estate professional because you own a construction company or you're a real estate agent. Now you need to show material participation in your rentals to deduct those losses. So you can group them together. In both cases, the 4 election, 9 election, you group them by attaching a statement to your tax return. So that about does it. Let's just summarize here. So to qualify as materially participating in an activity, you must prove you're involved in the operations of that activity on a regular, continuous, and substantial basis. There's 7 tests provided in the regulations to show material participation. That's the 500 hours test, substantially all test, 100 hours and more than anyone else, significant participation test, material participation in any 5 of the last 10 tax years, or material participation in a professional service activity for any 3 prior years, or the 7th and last test based on all the facts and circumstances. Hope you found value in this episode. Please leave a 5-star review or hit the like and subscribe button. Until next time, have a great day. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup.com/contact.